I don't know how to do that.
These are half deltas.
But that range.
Right. These are half delta lines. So
yeah, but you know when something gets 3 deltas up or 3 deltas down. Hey, it's down there, right?
Right.
And I don't know exactly how to do that, but intuitively what I did is just say, well, the Keltner band represents the same thing. And so you can actually see that on the 19th of September, it was 3 Keltner bands above the moving average. Then on the 25th or 6th of November, it hit a 3 Keltner band point and bounced off of it. And then in November, November 23rd, it hit a 3 Keltner down, bounced off of it. Then then in the December 13th, it hit a 3 Keltner band low on its load and bounced off of it. So this thing hits these 3 delta points. Let's call them. Yeah. It hits a 3. It can't make it above or below a 3 delta down or 3 Keltner band. No, it never. I can go back 5 years on Amazon, and every time the low hit that 5 delta point, that right. 3 delta point, it always bounced off it. Now,
in our platform here, prices it all in.
I would never trust the Keltner band on its own. I would trust Brian's on-balance volume matching up with the Keltner and say, hey, there's no denying it. Every time that it hits these low extremes on volatility over a 20-day moving average or a 30-day moving average, it doesn't go below that. And Brian would say the on-balance volume can't go to 0. It can't go. These things can't go to 0. So when you get a matchup of your delta range with your on-balance volume, and that stock never in the history of its existence has hit this extreme low on balance volume, or it has never exceeded this volatility range that it didn't bounce. And that's what I'm trying to do. I would say that if you could plot the delta, the moving average of your daily delta on the MMT platform, it would be better than the Keltner band.
It is. The platform is much better than the Keltner band, only because I can tell you everything that you said is correctly. On this daily wicks, you'll see half delta and 2 half deltas equal a delta. You'll watch. Half delta, half delta, half delta to half delta. So if you take the full half delta ranges up here, watch. 1, 2, 3, 4, 5, 6 off of the bottom. That's 6 half deltas. That's 3 deltas off the bottom.
And what I would say to you, Mario, is that I would bet you $1,000 that if you had a moving average of delta, that those bands would line up right on delta lines. Or
I bet you're exactly right, and that is the phenomenal part.
Yeah, I bet you, and I can't do that because I don't know how to do it, but I see over and over and over where there's only one charting system that I can get hold of right now. It's called Incredible Charts, and it allows you to compare the high-low divided by 2 versus the high-low close divided by 3.
Right.
And you can see, when you put those charts together, you can just see that the high-low divided by 2 is really the better way to guess, say I'm at the extreme of my volatilities. And I think Brian intuitively did the same thing by doing his on-balance volume using that same phenomena that you picked up on high-low 2.
Well, yeah, because there's only a buyer and a seller in the market, and that's where everyone tries to make something more out of what it is. After about 20-some years, buy-side, sell-side tape, heavily, as I found out, there are only 2 people involved in the market, and that's the buyer and the seller, and the third person is a market maker. And today it's high-frequency volume machines as well.
but I'm trying to, I think
You're
Brian
doing
is
quite well. So let me ask Brian if he's available. What about the on-balance volume side of things and the power of on-balance volume, sir?
Well, it's a great question, and it's something I like to look at all the time because it's like Joel says, you know where they're at, you know where they're in and where they're out. And if we go and we take a look at Amazon on 12/29, you can see that your 50-day on-balance volume was the most negative at negative 81
It was
million.
negative 81 million shares. Now, Brian Plain, you as being an MMT here going on your 7th year of placement, you have found out that the biggest negative on-balance volume is where I'm getting what? Net long.
That's exactly right. I mean, you look and you go from the 12th to the 29th, which is how many trading days? 13 trading days, and you went negative about 81.7 million. So you went from positive 635,000 to negative 81.1 million, and you can see the washout in the name.
What was the washout from what price down? It looks like it was from 191 on the high down to 166 at the lows where we were buying.
Mm-hmm.
Now, Joel, on the on-balance volume, the reason why you're so phenomenally amazed with it, and every MMT should be, as the Market Maker School says, is the market makers on the floor and high-frequency volume computing machines make turns on imbalances. That's what we call it. You could call it, I call it really, I'm going to name it the SMF indicator called imbalance on balance volume. No, on balance volume, but what is it? Imbalanced on balance volume is the key to success as a market maker, because when all of the public is out, look to get in. When all of the public is in on positive on balance volume and taking that 10-day total, taking that out to that 200-day total, and using the 30-day total, is that when you have a broader view, you will know that beyond a reasonable doubt that when the on-balance volume is at its highest negative peak, I am getting what, folks? What am I doing? I am getting net long, right?
When it's at the highest, you're getting short. When it's the most negative, you're getting long.
That's right. So when I've got, Joel, let me ask you this honestly. If you see where every turn in Amazon was at whatever ratio, whether it was a daily or whatever time frame was, that you probably had a big imbalance of volume on Friday's daily low right here. And we're going to look at it right here. Here's that. And this is a daily chart.
But I can tell you, Brian and Mario, that if I look at on-balance volume using the standard technical methods, which is the divided by 3, you cannot see it. It's only Brian. So, like I would say, on the 22nd of November, it hit. 21st, 22nd of November, it hit 3 Keltner bands down, and started to move up. And then on the November 13th, 14th, 15th, the spike down that day hit a 3 Keltner band down.
It did right here.
Yeah, and I don't know. See, I'm trying to match Brian's on-balance volume and just see.
Well, let's go back to that date on our thing, Brian. Well, here's 11/25 one that you popped, and you
and that was 3 Keltner bands down.
Yes, it was. So in Keltner bands, there were 3 down. In our system, each one of these teeny lines for Tuesday are $1.87. Let me blow this up, Brian and Joel. There's your bottom right here on your platform. Look at that pop. And yes, it was 1, 2, 3, 4, 5 down. 5 half deltas down.
Yeah. But every time it hits that 5 delta down, it has no choice to bounce. And then it held it on the 28th or 29th of December.
Right here is 11/29. That's your big down slide, that bid bar.
That right, and that bottom was 3 Keltner bands down.
And I'm down 1, 2, right in here, 2 half deltas down, right to the lines, and then look at that diamond
Yeah.
low here. Wow. And it held half of that daily bar too. Where was the
Yeah.
Keltner band then? And compared to our system, I'm bouncing here and making another high right in this area. On
Yeah. Well,
I peak to
yeah. Yeah.
191, half bar,
Yeah,
194.
and that was right at the 10-period moving average for this thing. Because that is only probably half a Keltner band,
Right.
a 2 delta Keltner band. I can't help you there. But what I'm trying to say to everybody is that if we plotted the daily moving average of the delta
Right.
change on the MMT platform, and when we see these things hit two, whatever they are, for the stock, you can historically go back and say, hey guys, it's 3 delta down.
You got to
It's
buy.
never, ever.
Yeah.
You got to buy,
You got to buy, and you'll make
you
a
put
lot
your
of money.
bids out there, baby.
Yeah.
Yeah, you put your bids out there. But because we only have the daily chart and we don't have these relative moving points, I've just kind of gone to Keltner bands. And what's funny is Brian nailed it. If you didn't, I've challenged him to do this, to go back and divide by 3 and do the high-low close, and your whole system doesn't work.
No.
It wouldn't work.
No.
Right?
No, it wouldn't
I don't
work.
think it would work.
No. Because standard technical analysis, which is all the stuff here that people have used, look at Keltner was banned in the 30s, wasn't it?
Well, no, it wasn't banned. What happened is that they switched from the high-low close. Somebody came along, right, thinking they're smart, okay, and did the following. They did exactly what we're talking about.
That's
Keltner,
right.
And excuse me for the misdate, it's actually in the early 60s. He was a commodities trader, not the 30s. But you can go back and find high-low close as the standard of everything in the commodities world was high-low close for in the 30s. Okay, but Keltner original did high-low close divided by 2, and then they came along and did high-low close divided by 3 in the 80s. All right,
That's
and
right,
the
because
Keltner band really didn't really serve the thing that what we work on. I'm trying to find stuff that says I can match up with our platform that gives me an idea where I am in terms of delta.
Well, you
That's
can.
all I'm trying to do.
You see this variable moving average right here in your. See my pointer? Variable moving average.
No, I don't.
Well, look here.
I don't. Let me I switch pages on my computer. Center.
Yeah, I'm right here on
Where are you?
Number 2.
My.
Right up here.
Yeah,
variable moving average. If you put the variable moving averages relative to teeny lines. Oh, I'm sorry, I just got kicked off of there. If you put your if you want to compare the platform against this, variable moving averages is what a lot of hedge fund managers and institutional intraday managers trade with, but you can compare it to your teeny lines, and you can compare it to where that turn happened, but I went down another half a teeny, which is $1.87 below the line, and then I move up that $1.87 plus. I've already got about a $2 lower entry down here. You'll see that the variable moving averages will follow your MMT platform teeny lines that are priced right to each line perfectly, and you can see the lagging effect of them. I would use this one here. That's one.
Well, what I'd say to you, Mario, is the problem that everybody has is on that date, you did not know whether Amazon was going to keep falling or it was going to bounce, right?